Robinhood may have just created one of the most interesting products that they've ever offered retail investors. And I'm not saying this lightly. They made a product where, in one ticker symbol, RVI, you can own pre IPO companies that normally retail investors would never have access to. Companies like Databricks, Ramp, Stripe, ElevenLabs, and even OpenAI are contained within the fund. But this is not a normal stock or an ETF. And this is where the catch comes into play. So even though it trades in the public market, these companies are private, which means that they are hard to value, hard to sell, and it makes it so it's a very interesting product that trades live on the market but has private valuations. So in this video, I'm going to explain to you how RVI works, things that you should watch out for, and how it belongs within your portfolio. But most importantly, I'm going to explain to you the difference between NAV and RVI's stock price, because this is the key thing that you have to watch out for when you invest within RVI. NAV stands for net asset value. And when it's a fund like this, NAV is basically the estimated value of the holdings within RVI. And this is different than the stock price. RVI IPO'd at $25 a share, but its NAV value was $24.05. Ever since then, it's ran all the way up to around $40 or $41 as of this recording. That's a pretty huge gain already, around 63%. RVI also recently got a piece of the SpaceX IPO. So they now own SpaceX, as well as a lot of the access to these pre-IPO companies that I'm going to walk you through for their full portfolio. But what's interesting here is the NAV now has a really significant gap to what the stock is trading at. So the question that you're wondering is, are there going to continue to be more cool companies entering RVI? But the real question is, am I paying a fair price to get access to those cool companies before they come on the public market? And that is exactly what I'm going to be breaking down in the video today. And before we get to it, if you like videos like this where I talk about AI, stocks, IPO, and try to make things in the most plain English way that beginners can learn, be sure to like this video and subscribe to my channel so that you don't miss any of my other videos. So let's get right to it. RVI stands for Robinhood Ventures Fund 1. So there's probably going to be more of these on the way. And the idea of this is very simple. Basically, Robinhood wants to give you access to pre-IPO companies that retail investors normally miss out on. And this is a really cool idea because it allows you to get into these companies before they IPO. And as we've seen recently, a lot of these companies can really pop off, or the valuation that they've built comes before you get in with the IPO. So allowing yourself to get access to these companies before the IPO sets up what could be a pretty explosive opportunity if they get invested in the right companies. They've also left themselves open to be able to invest in other companies that they think are really good bets for the long term. And this is what allowed them to recently also dip their toe into the SpaceX IPO. So when I go and look up RVI, it looks like a normal ticker symbol within the stocks exchanges. So I can go and look it up and it trades just like a normal stock where I can buy and sell. But again, this is a closed-end fund, which means that it's different than what a normal stock or ETF is going to be like. So this is the tricky part that starts coming up because I have a fluid price as I go up and down since it's trading freely on the open market, but I have private assets that are holding value, and that value may not be fluid like we're seeing reflected in the stock price. So what happens is you start seeing a really big gap forming between the value of the underlying assets and the value of the stock price. This is why RVI is so easy to misunderstand, because the headline says, I get access to pre-IPO companies, which sounds really cool and something that everybody should want to jump into. But the real question is, which companies am I getting? How much of those companies am I getting? And what premium am I paying on those companies in order to get access to them before the IPO? So with closed-end funds, you need to pay attention to these two numbers. NAV, or net asset value, which again is the sum of the valuation of the underlying assets that the company owns, and then the ticking price or stock price of the market. And the gap that is between those two things is the key thing to pay attention to moving forward. So, the way the NAV goes up is if the valuation of the private companies that RVI owns goes up. And the easiest way to notice when this happens is if these companies try to get more funding. And as their series A, B, C, D, all of this goes up in valuation, the value of the stock that RVI was able to purchase will also go up. One of the companies that's already had valuation go up for RVI has been Databricks. So, more to talk about that later. If the stock price goes up, it doesn't necessarily mean that the value of the companies went up. People could be getting excited about OpenAI. People could be excited that they just got into SpaceX. People could be wondering, maybe I do want to pay the premium to get access to these and I want to buy in now. And these are the things that can affect the stock price. But you can see that there's going to be a disconnect between the value of the companies in it and the stock price itself. So before you invest in RVI, you need to ask yourself two questions. The first question is, what does the fund own? And the second question is, what is the premium amount that I'm paying to get access to what they own? And I'm going to be going into the portfolio and what's currently in RVI here soon. Before we get into the holdings, I do want to make one clarification that when you look at what they filed with the SEC in March 31st, their recent shareholder letter, and then the current RVI's holdings, there's a little bit of a difference in the amount of companies that were existing at that time. When you look at the SEC filings, they had 11 holdings at the time, but only 9 underlying companies. So when you hear holdings, you immediately think that I'm talking about companies, but in this instance, it's not the case. For example, they've actually purchased into Databricks twice, creating 2 different holdings at 2 different prices. Ramp was the other company that also had preferred stock as well as common stock. So these are really important distinctions when we go through the portfolio. So as of March 31st, the list of companies were Databricks, Revolut, Mercor, Airwallex, Oura, Boom Supersonic, Ramp, ElevenLabs, and Stripe. So those are the companies that they owned on March 31st, but they've added things since then. Since March 31st, they've made an investment in OpenAI. They made an additional round into Stripe, and then also recently dipped their toe in the SpaceX IPO. So altogether, they currently own 11 companies within the fund. So if you're like, wow, RVI owns SpaceX and OpenAI, that's amazing. That's a great comment to make, but the real question is, what is the allocation that they have? Because if they don't really have that much into it, it doesn't really matter if that company moves much anyways. So next, I'm going to be starting to go into what is the actual breakout of how the fund is structured. So when you invest in RVI, most people don't realize you're actually investing in a lot of cash that's just sitting there in a money market fund. So that part is not very exciting, but this is brand new. And when it IPO'd, 48% of the amount of money that was sitting in the fund was in actual assets. The rest of it was in cash. So you're actually paying more money to basically have money just sitting there within a money market account on top of the other cool companies that you're invested in. So that allocation split is really important and something that we have to watch moving forward within the fund. And granted, this is not necessarily a bad idea because you do want the fund managers to have money ready to go, that when they do find cool opportunities like OpenAI or maybe even Anthropic in the future for them to invest in, that they do have cash ready to go for that. So it's important to keep in mind what is currently allocated and then what the plan is for the fund moving forward. So let's go through the portfolio and figure out what percent of assets each of the holdings has, and then you can decide if you think this is a good mix for them to have so far. And the first one that we're going to be talking about is Databricks. And 12.5% of the dollars within the fund are being allocated to Databricks. Databricks is an AI company that helps companies organize their data. So AI is not just chatbots, it's also how do I get my data organized so that I can make really good decisions and have these different systems get talking to each other, because a lot of the data sits in different components within a company and gets really messy quickly. Databricks comes in and helps these different systems talk to each other. So from an investment standpoint, this gives RVI exposure to enterprise layer AI. So there's no hype here. These are real ways that companies are using AI across the board. Since this is one of the largest holdings within the RVI fund, it is really an anchor. So if the value of Databricks goes up, this is going to help drive RVI stock price up. The next position that I want to talk about is Revolut at 7.7%. Think of them as kind of like a fintech super app. So they have a lot of different products that are banking related and can help with money transfer, and they also have global scale. So the great thing here is that you can see that we're already starting to get differentiated away from Databricks. Databricks is AI data infrastructure, and this is a financial services, which allows them to start differentiating their offerings within the portfolio. On the other side, for me, fintech is not very exciting. Like there's a lot of competition here. It's very sensitive to interest rates. So this is much more of a volatile position for the thing to be owning because it had to have really high upside, but it also has significant competition. The next company is Mercor at 7.6% of the fund. And they are an AI talent workbase, basically helping companies match really good talent to the job that they are hiring for. So this is kind of an interesting one because all we hear about is AI replacing people's jobs. But this is a weird intersection where this is actually AI helping companies find people for jobs faster. So it's kind of a brilliant idea, and it really changes the way that recruiters can be scanning for really good talent to fill those open roles that they have within the company. This definitely places it in more of the speculative bucket because of what I just talked about all the risk of just jobs and the way that that's going to be affected moving forward. But this also allows it to, again, have another AI application and a little bit differentiated from the other two names I've talked through so far. The next one is Airwallex at 3.8%. And this is another global financial services platform. They help companies move money globally and across different borders. So if you think about all of the issues that come about with currency exchanges and sending payments across different companies, this allows them to kind of simplify that process and makes it so my company can transfer money way easier. So where Revolut was more customer facing, Airwallex is more infrastructure facing and set up for businesses and not that final retail consumer. The next company is Boom Supersonic, and it's also sitting at 3.8%. And it's kind of a unique position within the portfolio because it is attacking the industry of supersonic travel for airplanes. Supersonic travel can significantly cut down on the amount of time it takes to travel and fly. So this idea has been tried before, but it has noise issues. And that's really what they're trying to tackle is how do we get supersonic travel without that supersonic boom? So this requires lots of infrastructure and equipment to really figure all of these different things out. Aerospace is really hard. It's extremely regulated. And if they even get this off the ground anytime soon, I will be really surprised just because of how long it takes for everything to go through regulation. So this one is really a very big speculative one. But again, supersonic travel, getting that done correctly could basically revolutionize the way that people fly right now. The next company is Oura, and this is another one that's at 3.8%. And I think a lot of people will be more familiar with this name because of the Oura ring. So again, it's a way for people to wear the ring. And really, the idea here is people want to be on top of their own wellness. I feel like we're in the age now where you hear people talking about their sleep score and their mental wellness. And consumer health in technology is exactly what Oura is trying to tackle within their products. So that health market is definitely there, but since this is a consumer-facing product, this means a lot of competition coming in. And we know that Google is coming out with one of their products that's very similar. So this one I'm not as excited about just because the sensitivity of competition. But for now, Oura has a very big lead on this kind of health and wellness space. The next company is Ramp at again another 3.8% of the fund. And they are a financial operations company. So think about expense management, corporate cards, bill transfers, all of that stuff that companies care about with their employees. This gives them a way to manage all of that. So this is really nice because this is a real industry and this is a real area that companies struggle with, that they are kind of addressing with this. This is one of my favorite companies that this is invested in because I think they're tackling real issues with their technology. There's one way to help a company, and that's by making them more efficient and cutting costs. This is a great idea that I'm really all for. The next company is ElevenLabs, and they are about 3.1% of the fund, and they specialize in AI voice and speech. If you have ever listened to or dealt with an AI generated voice on YouTube, Instagram, everything, that one narrator guy you hear in every video, it's probably ElevenLabs that came up with that. So the addressable market here is huge within gaming and all of the other industries that could need artificial intelligence to generate voices. So this is a really exciting position, but it also has a lot of competition. ElevenLabs is not the only ones that are dealing with AI voice generation. So there's a lot of competition here. But when I think of ElevenLabs, I immediately think, will there be a bigger AI company that comes over the top and purchases ElevenLabs? We'll have to see what happens from there. The next company is Stripe at about 2.2% as of March 31st. And they're probably one of the best private companies or most well-known companies in the world within private fintech. They help businesses accept payments and manage subscriptions. So they are a huge infrastructure player, and a lot of businesses count on Stripe. Since March 31st, there have been some pretty major additions to the fund. And the first big one that I want to talk about is their investment into OpenAI. On April 17th, they made a $75 million investment within OpenAI. So this is a major investment and a major bet that they're making for the fund. If you do the math, and again, this hasn't been officially released, but if you do the math on 75 million based off of the assets, this would put it at around 11%. So it would be the second largest holding within the fund. OpenAI is rumored to be going public later this year. So when this announcement came up, this is really what started driving the stock price up for RVI, because other than Anthropic, there's basically no other company from a private perspective that retail investors want to be in more than OpenAI. The next update was in June. Stripe got an additional investment that basically doubled the size within the fund. So Stripe has gone from 2.2% now up to around 4.5%. And this is huge because Stripe is probably one of the most proven companies within the total fund. So getting more exposure here makes a lot of sense. Now let's talk about SpaceX. And everybody has been talking about SpaceX because of their recent IPO. Well, if you own RVI, you actually own SpaceX now. So they got a piece of SpaceX IPO and they invested $6.75 million of SpaceX stock. So this sounds really exciting because they own a lot of stock, but when you look at the total value of the fund, 6.75 is really only 1% of the total fund. So even if SpaceX continues to do well, or on the flip side, if it craters from here, it doesn't really affect the fund that much because it's such a small holding within the broader portfolio. So SpaceX IPO'd at 135. Right now, it's trading right around 185 at time of recording. So that's about a 37% increase. So RVI's position has gone from 6.75 to now roughly 9.25 million. So again, this is a great lift, but when you think about its total contribution to RVI overall, it's a really small allocation. So this is good for the NAV value of the total fund itself. But since it's such a small percentage, when we hear SpaceX being invested within RVI, think of this as more of a story-driven narrative. Basically, Robinhood is trying to get people excited about the fund because everyone is talking about SpaceX. But you can see really from a money perspective, they didn't match the narrative with the amount of money that they actually invested within SpaceX. So this helps drive interest around the stock, but in general, don't think of SpaceX and RVI as very related because it's so small. So this is the part where a lot of investors miss. It's not just about the types of companies that are within the fund. It's more about the allocation and spread of the money that the fund has invested within these different companies. And I think SpaceX is the perfect example. Yes, it owns SpaceX, but because it's so small, it doesn't matter. OpenAI and Databricks are really going to drive RVI more into the future than SpaceX ever will. This is why allocation matters. So now if we revisit and kind of do some napkin math, if you will, of what the fund will look like now with these new investments, I'm going to take you through where the money is now allocated and where the split is now between net assets as well as the money that's sitting within those money markets. RVI had about $97 million invested since their March 31st update. 75 million going to OpenAI, 15 million going to Stripe, and 6.75 million going into SpaceX. So assuming that all of this came from that unused money that was sitting in money markets, this would bring their money value down to 250 million. So this would represent what used to be over 50% of the portfolio being within cash to now 38%. So you can see we're starting to get much more into actually invested assets rather than just investing in money sitting in money markets. Now, this is probably the most important principle in the whole video. And you can see that since March 31st, those updates that have happened to the fund have been really positive. And this is why the stock price has gone up. But now the final question is, how far has NAV gotten from the premium that you're now paying to actually get the stock? Back in March 31st, they reported the NAV at $24.05. Right now, the stock is trading around $41, which this means that you're basically about a 70% gap between those two numbers. And this is what is called the premium. So what we need to do now is factor in the new investments they've made since and see where the valuation currently stands. So since March 31st, when you add in the new assets that are in there, all you've done is move money from the money markets into actual net assets. The only other asset that has had a net gain since then is the SpaceX IPO. And this contributed about $2.5 million to the underlying assets. So if this was a NAV price, this would raise it from $24.05 to $24.14. Not much of a change. So then if you factor in the new price with the current price of the stock, that brings it down to a 69% premium that you're paying when you invest within Robinhood Ventures Fund. So you're not paying for a good value on the underlying assets. You're paying for the excitement and ability to own these assets before retail investors can normally get into them. We're going to continue to see this gap between NAV and Robinhood Ventures stock price continue to both shrink and widen based off the news of the underlying companies that we hear. Also, it's important to keep about not only can the value of the companies that they're currently invested in go up, they could also invest in other companies like maybe an Anthropic at some point that could bring more excitement to the stock, which would then drive the price of the fund up for more there. So basically, the cleanest way to think about this is the NAV tells us what the assets are currently worth. The stock price tells us what investors are willing to pay for access to the current assets, as well as the idea of future investments in the future. So this is going to be really interesting to watch and see how this expands over time. So the next thing that we need to talk about are fees. And it doesn't have a performance fee like you would normally see with kind of like a ventures fund, but there are fees associated with RVI when you invest in it. Right now, the expense ratio for RVI is showing at 3.13%. So this is super high fees when you compare this to a lot of other funds. But when you think about what you're getting from a service and the specialty nature of what is going on here, it kind of helps justify the fund. But again, when the fees get like this much, it starts seriously taking a lot of money away from you over time. Robinhood is giving people a temporary break in the fees. So right now they're giving a 1% reduction, and that'll change later in the year. But this is kind of an incentive for people to get in. But if you invest in RVI, just know that you're going to be paying very high fees for the specialty service that you're getting. So overall, I really like the idea of RVI, but it's important that you treat it as more of a satellite of your portfolio rather than a core holding. So it's something that I'm very interested in just from a perspective of it seems like an awesome idea to be able to own companies pre-IPO. This is something that everybody talks about, like only if I could have been within SpaceX before it was pre-IPO. You're hearing about all of these millionaires that get created from this. I really like the idea that Robinhood is giving people access to this, and granted, you do have to pay the fee still. The other concerns, though, for RVI is on top of the fees, some things to think about are just the volatility of having a fluid stock price with having private companies that are not fluidly moving. So the stock price has been very volatile. It's shot up all the way up into the 70s at one point and then basically crashed 50% from there. So if you would have bought this already at that 70s, you're already down massive money. So again, this needs to be part of your portfolio that's treated as a specialty satellite and not a core position that you hold. So overall, RVI is a really exciting position that you can consider for your investing portfolio. It's really important to treat it more as a satellite position and make sure that you are balancing it out with other more for sure assets because you can count on RVI. It's going to be very volatile moving forward. If this video helped you understand RVI better, please give it a like and subscribe to the channel so that you don't miss any of my other videos that'll be talking about anything investing and trying to make it the simplest way as possible. Also, be sure to check out alextalkstocks.com and sign up for our new upcoming free newsletter where I'll be sharing even more helpful advice to help you stay on top of the market. Thanks for watching, and we'll see you next time.